Hi, RealtyNXT viewers. I am your host, Kritika Singh Rawat, and today on Let's Talk Business, we are excited to have a prominent figure in the world of fractional ownership, Shiv Parekh, the founder of hBits. In this episode, we delve into his inspiring journey, unravel the captivating tale behind the name hBits, explore the initial challenge he overcame, dive into the recently approved SEBI AI fund, get insights into the company's future plans, and discuss his perspective on proptech investments and gain a comprehensive overview of the current real estate landscape. So stay tuned for this insightful conversation. Thank you, Shiv, for joining us today on Let's Talk Business by RealtyNXT.
No, great to be here. Great to be here today.
So, Shiv, I want to know first of all the backstory of hBits. How did you come up with this company in terms of what need gap did you notice in the market that made you feel that hBits is required?
So let me start actually by telling you about myself because I think that journey is a little important, and then how I kind of figured that this was required in the market. So born and brought up in Bombay, did my undergrad outside India, studied at Stanford, studied physics, worked very briefly in New York, but I said all the action is in India. So I moved back to India very quickly. Initially, so that's where I got my exposure to commercial real estate specifically. So I worked with my father who's into commercial real estate development, just got a grasp of the industry, built my relations in the industry. And then in 2015, in fact, I'd set up one of the first few co-working spaces in India. That time you had your few other players, 91 Springboard, Office.
Yeah.
One of the first few players, they had one center each. WeWork hadn't even entered the market. So no one had heard of co-working then. So set up one center, it did pretty well. I had the option of expanding that into a larger business. But then I decided to go do my MBA at Harvard.
Right.
And by the time I came back, co-working landscape had completely changed.
Yeah.
There were 300 different players. WeWork had entered the market. It was a price war. So I said it doesn't make sense to expand this business. So I started looking for other opportunities. And then I observed, to answer your question, that there was a gap in the market, right? On one hand, you had commercial real estate developers who didn't have too many exit options for their properties, right? They'd build the buildings, they'd lease it out. And then there's only, at that point, only two exit options. One of them is to sell to your large funds, your Blackstones, Brookfields of the world. But they were, buying assets in thousands of crores. Or you could sell floor by floor or unit by unit to ultra HNIs. Right? And there the minimum ticket size of a property may be 20, 30, 50 crores.
Yeah.
So universe of such ultra HNIs is very, very small, right? Maybe a handful of them, few 50 of them in the country. Not only people who have the capital, but also the ability and the knowledge to invest in real estate.
Yeah.
So very few ultra HNIs work in this market. So developers didn't have too many exit options. On the other hand, it's a very attractive asset class to own. For instance, you get 8 to 9% rental yield. You have great tenants, right? Like some of our tenants are ICICI Bank, Mane, which is a French MNC. So amazing tenants, long-term contracts, and good appreciation in commercial real estate, right? In general, 5% year on year you get because your rental contracts escalate that much. In fact, that's why Blackstone, for instance, has done so well in India.
Yeah.
So thought was that it's a good asset to own, but can't own it only because the ticket size is large for most people.
True.
So the initial thought and vision, and the vision is the same today, is to create a stock market of real estate. So that's where the idea was born out of. And both sides of the market, there was a gap, right? On developers, like I said, limited exit options. On the other hand, amazing investment opportunity. Just needed to reduce the ticket size to provide, a more affordable investment avenue. And from an investor perspective, it's a great product to own, right? I gave the dynamics of this product, but let's compare it to other products as well, right? You have FDs, you have debt instruments that offer 6, 7 odd percent. And that's it. That's all you get. Yes, it's safe. It is very safe, but that's all you'll get. Here it's also pretty safe. Back long-term contracts, you're getting higher than FD, higher than inflation, 8 to 9%.
Yeah.
And then you have equity on the other hand. Equity, you can make a lot of money. You can also lose a lot of money.
Yeah.
Equity can go to zero.
Yeah.
So here at the end of the day, you're still owning a hard asset. There's still a value. So it's a great hybrid between debt and equity that people didn't have access to. And that's where the idea came from. And then obviously, as most startups, most innovations today, it had to be tech enabled, because that's the new way to reach out to people, to give the most value to investors. So that's where the whole idea was born out of.
So initially, I'm sure you must have faced a lot of challenges, because to create that kind of awareness, to make people understand what fractional ownership is and how it's going to benefit them. So what were those challenges, and how did you overcome, those particular challenges?
Yeah, so initial challenges, yes, there are. Especially in such an industry where so our minimum ticket size then and our minimum ticket size now for investment is 25 lakh. So it's not a small sum of money for anyone.
Yeah.
And as a startup, asking someone to invest 25 lakhs is not an easy task, right? And sure, I had a good degree, a good background, good educational background, but that doesn't mean anything when you're getting someone to invest.
True.
Because there they care about scale, comfort, trust, etc., which didn't have any background in that, right? And they also want to see gray hair at times.
Yeah.
They didn't have any of those. And I'll give you the story of our first asset that we launched. It was a smaller asset. We started small, 7 crore asset. And I had a team of 4 people. You're not going to have a large team when you start.
Yeah.
And we were sitting in we decided the first asset, checked a lot of boxes, good asset to own, good price, good rental yield, good tenant. So checked all those boxes. So now the thing is, how do we sell it, right? And we had 2 ways of kind of getting your initial customer base, right? We built our MVP, our basic website. At that point, it wasn't a complicated website. And we started digital marketing campaigns, and we started getting customers who were interested.
Yeah.
Or not interested in the concept, right? Your Google ads, Facebook ads. So that started flowing in bit by bit. So there are 4 of us, I remember this clearly. There are 4 of us, me plus 3, sitting in a kind of glass conference room. I say glass because 7 crore asset, 25 lakh means we need approximately 30 customers. So on the glass with my marker, I wrote 1 to 30. 1, 2, 3 to 30. And I told my team that, in 30 days, we need to get 30 customers. That was like, let's go out and do it. A lot of energy, a lot of aggression. We were talking to both people from our Facebook campaigns, cold calling. That's how you do it at a startup in the early days, and also trying to work with brokers and channel partners also to get customers. At the end of 30 days, we had 0 customers. So so at, maybe it's naivety, and I think maybe a lot of other startup founders will say this. Going in, you don't know how hard it's going to be.
True. Yeah. But in 2019 you started hBits, right? So during that time also, investors or home buyers starting even with 25 lakhs, people think about, as you mentioned, FD kar lete hain, gold mein invest kar lete hain. Yeah, why not stock? So how did you convince them about fractional ownership?
Yeah, so then, and obviously I was the first salesperson of the company.
Yeah.
So what you have to just show them, there are 2 things, right? First, you have to convince them on the asset, or like the concept of investing in commercial real estate. I remember when I started the business, you asked people, real estate investment, what do you get? 2 to 3%. Because the mindset was, apartment. In apartment, you get 2 to 3% rental. So just that knowledge that in real estate, you get 8 to 9%. Your tenants are MNC tenants, not your, individual families. Your buildings are grade A quality glass facade buildings, not your, old buildings. So one was just that customer education, explaining the customer that this is the dynamics of the product, this is how it works, showing them that this is the agreement that the tenant has, showing them photos of the building, and then displaying all that on our website. That was obviously very important. So explaining the product. And I think the product, in terms of the actual underlying asset, people were, once you explained it to them, they were sold pretty quickly because people understood the numbers, etc. And they're like, okay, this is a very good asset class. It does give good returns. It does give me rental, and it gives me appreciation.
Yeah.
Then the challenge becomes, but then joint ownership, how do you do? You know?
Yeah.
Then you explain them what is investing in a public limited company is joint ownership only.
True.
So established structures do exist. So it's a question of having a conversation, explaining. So then eventually that they also get convinced, and they realize, okay, it makes sense as long as, and we work with the top lawyers at that point in time, even today. So Vadia Gandhi helped us with the whole structure. So that gave them comfort. that okay, structure is safe, it makes sense, you thought of all the possibilities, etc. Then final thing becomes, but then ultimately we are the ones in charge. So why you? And that's where that the comfort, the relationship building, the trust comes in. So that's all it comes down to. So those were the three main things that we had to discuss with people to get them to invest.
So hBits is quite a captivating name. And I'm sure in beginning your investors must be also asking why hBits and how this name came up. So what's the story behind this?
Yeah, it's a funny name. So we wanted to be little scientific about it, right? So we thought as catchy a name, startup, new age, as short, so 5 letters, 4 letters, so you don't even get a domain on Google. So 4 letters, not used, like can't be confused with anything else. That was that. Then we brainstormed with the team. What can it be? So we're a proptech startup, so we wanted to have a flavor of that. So H is the 8th letter in the alphabet. So and there are 8 bits in a byte. So the way bits make up a byte in computers, that way fractions make up the property. So that's the story of the name.
Interesting. So tell me, during the journey of yours, when you started in 2019, there were few players already in fractional ownership, right? So how did you make sure that your hBits as a company stand apart? What was the USP that you have, above the rest of the other players who are there in the market?
So at that time when we started, I remember I thought of this idea, then I looked up online. There was only one other player that was there, a Bangalore-based player. Our USP was always going to be, and is still, our ability to acquire good properties, our ability to manage properties, and our ability to exit properties. So those are the three main things. That is ultimately what it comes down to, because all those three will give investors good returns. Then we also wanted to be as transparent as possible and provide all information and data to investors. So that's the values that we live on even with today. In terms of acquisition of property, even if you look at our AUM compared to some of the other players, our AUM is lesser. But because we've been very particular in kind of the properties that we bring on our platform, we are much more patient. We think about in long term. We think that it's not really just sell today. It's more that tomorrow we need to give back money to investors.
True.
So that's very important to us. So in terms of acquisition, we look at from a very detailed perspective. We look at building quality. We look at tenant quality. We look at micro market. We look at the strength of the leave and license agreement. We look at the rental value and the capital value in the market. So we work with our data partner CRE Matrix to see in the micro market what is the rental, what is the capital value, and we make sure that we're below that. And we're very patient. So just to give an example, when we listed our recent asset, we looked at about 10,000 crore worth of assets before listing this asset on our platform.
Nice.
Right now, obviously, we have the ability because we have a large team on the real estate side only of 7 people, and I'll talk about that later. But so on the asset acquisition, we're very particular. Even in terms of property management, again, given the background, we've been dealing with and I've learned from my father, we've been dealing with the top tenants. He's had banks as his tenants, he's had MNCs as his tenants, and we know what goes into releasing it. We have great relationships with the admin heads, HR heads of all these MNCs, because that's what you need with the IPCs when you lease to these tenants, because ultimately the game is, again, even for tenants, the game is not to make them come to your property. That's only part of it. The game is also to make them stay, provide good customer service.
True.
And we know how to manage that. So during COVID, just because of that, we had 100% collection of rental and 0% delay. That was because of our tenant selection, the strength of the agreement, and tenants also taking a long-term view with us. And then exit. We are the only player that has historical experience in exit. We've exited, and what I'm saying is, in my father's company, we exited properties. So that knowledge is there. Who are the players to exit to? How to exit? What goes into that? So that is our USP. And then over and above that, the trust, the transparency part. Just providing just constant communication with investors through emails, on their dashboard, providing all this information to investors.
So you're emphasizing more on the patience part, right?
Correct.
So I want to understand, even when it comes to tenants, what kind of checklist does hBits follow to have the right deal in place and to have the right asset in place? But during that time, to follow up to that question also, I want to know, don't you feel in this patience game, there are so many now players getting into fractional ownership? Don't you once feel that you might lose out in this particular property or in this particular investors if you guys be patient enough?
So I'll answer the second question first, right? The losing out, and then about the tenants. See, in terms of patience, I'll just give two examples. In 2007, 2008, in real estate in India, people thought land was going to get over in India. It was a rush.
Yeah.
There were about, I think, somewhere between 50 to 100 funds, real estate funds that came up then.
Yeah.
Barring 4 or 5, all of them shut down because they lost investors' money. And because they're not patient, they're not particular. Even if you look at someone like, and I'm not saying we're anywhere close to him, but if you look at someone like Warren Buffett, what does he preach? You have to get the fundamentals right, and in the long term, you'll have the right investments. So in the short term, fine, we might not be ahead, but and then it's what you tell in a children's tale as well, right? The tortoise beats the hare, slow and steady.
True.
So that's how I think about it. And the goal is not to have the largest AUM. The goal is to have good investments. On the tenant part, I'll just talk as a little bit more, micro. So we're very particular on the tenants that we take onto that we kind of get on the platform, and we're very detailed. So one, we study the balance sheet of the tenant, right? And that gives us an idea on the credit rating, stability. If the credit rating is there, we anyways look at the credit rating. If it's not there, we look at kind of the profit margins, what industry it's in, what kind of cash balance they have. So a full, basically, financial checklist.
Yeah.
The way a lender looks at someone, ultimately you're giving a loan. It's not giving a loan, but ultimately the way a lender will look at giving a loan to a company, that same kind of scrutiny we do using the financials of that potential tenant. So that's number one, and you can get more detail. Number two is we look at the tenant's history in that property. What is their rationale for coming in? What are their plans? We'll have a conversation with the whoever senior, the HR head or the CFO of that tenant, what their plans are, what their intent is. So, for instance, one of the properties we acquired close to here in Andheri was, the tenant is Mane.
Yeah.
So they have a lab there. Now, they have a lab, obviously, that's even much harder to shift. And because they have a lab, they have very specific kind of employees that they require. Those employees are anyways living close by over here. So then it's going to be very difficult for them to shift. So that's the other thing. Then we look at what kind of tenant improvements or furniture fit out or capex the tenant has put into the property. Right? Has the tenant done the civil work? Have they invested in the flooring, fit outs, plumbing, or is the landlord? Because that makes the tenant more sticky as well.
Yeah.
So those are kind of the checks that we do on the tenant. And then we also look at the payment history. So we study the bank statement of between the tenant and the current landlord to see that the payments have come on time.
And what scrutiny goes in terms of the checklist for the serious investors? So, for example, if you're having this kind of asset and you want the serious investors for the long term, because as you said, this is a long-term game for you, right?
Yes.
So having the right investor also makes a huge difference, because there can be investors who are looking for long term, but there can be investors who want to just exit after 2 years or 1 year, within few months only. So how you filter that out?
Yeah, so I think what's very important is being completely transparent with the investors as to how this asset class behaves, what kind of return profile it has, the fact that appreciation is really made over the long term in real estate. And we disclose that to the investors. We mention it to the investors that, this is a long term investment. That's when you make the real returns. If you look for a quick entry, exit, then that's not where you make your real returns. On the flip side, some investors do have emergencies. Yeah. Right. So we had an investor. He had a long-term view, but in a year he had a medical emergency of someone in his family, so he needed the capital. So that's just one example. But anyone who's wanted to exit prematurely, we've been able to give them the exit.
Okay.
Yeah. The appreciation might not be as high as if you had stayed for long term, but your principal is safe and you still made the rental income during that period of time. So just that transparency, providing that information to investors. That's how we kind of make sure that we have smart, sophisticated investors. That was the other reason that we made sure our minimum ticket size was 25 lakh.
Okay.
Because we also didn't want mis-selling of the product.
So when such premature, exits happen, how does it affect? I want to understand. I'm sure our viewers would also like to know, how does it affect a complete portfolio, because there are other investors also involved, right? So do you immediately look for another investor who can fill
Yes,
that gap,
that's
or
how it works.
okay?
So basically, we find another investor, and that happens because now we already have 60,000 registered users on the platform. We have 500 partners that we work with, and just growing. So we find someone else to take that investor space. So it doesn't affect the other investors at all.
Okay.
They keep getting their share. So we give this, another new investor comes in. Generally, in a month, 45 days, we're able to find another investor. That's kind of how it's looked like so far.
And are there possibilities where there's no emergency, but the investor feel, okay, it's been a year or 2 year, but they feel there be not much of growth to it? Can they also easily get exit from those?
See, in the same way they can. The growth and the tax efficiency, see, even in terms of taxation, the long-term capital gains kicks in after 3 years.
Yeah.
So even from a tax perspective, it will make sense to wait 3 years. Generally, escalations are either 5% every year or 15% every 3 years. So again, from a appreciation standpoint, it makes sense to wait that. So in every standpoint, if someone just wants to stay for 2 years and exit, they can. They have the option, but the real appreciation will be seen in the long run.
But is there any kind of a lock-in period for these investors?
No, we don't have a lock-in period.
Okay.
Yeah.
Because why I ask that, because few players do provide the lock-in, that if you are investing in this particular asset, max to max you have to be there for 1 year or 2 years. So there's no mandate like that.
We don't have a lock-in period, right? And the reason is we're trying to mirror, just philosophically, we're trying to mirror that if you had 20 crore, 50 crore to invest, you wouldn't have a lock-in period. But at the same time, the 20 crore, 50 crore investor will not get appreciation in 1 year, 2 years. True. It's all long term. So we want to mimic exactly how it is like to own the full property.
But don't you think it always helps to have a lock-in, because then you have more potential serious buyers in comparison to, let's talk, if I have FD or if I have PPF account, there's always a 5-year, 4-year lock-in period, and it makes sure that you are doing that in terms of investment, right? So when it comes to this,
the only scenario is like these emergency scenarios.
Yeah.
And then we don't want to be the platform scrutinizing whether the person actually has an emergency or not.
True. Yeah, that's true. So you started in 2019 and we are now in 2023, and we have seen hBits seen a quite good substantial growth. So what would you see are the key factors or the key points which helped you or your company to grow in such a short period?
I think main is just having this philosophy of building trust and transparency within investors. So building that trust, building that investor base in a slow, steady way. And then from a team perspective, I think I have to also give props to the team. They've worked very hard. And one of our mantras or strategy within the team is it's how in real estate you say location, location, location.
Yeah.
For our team, it's all execution, execution, execution. You can strategize as much, but it's about getting the basics right. That's all it is. You get the basics right. You don't overthink that, plan this. You get the basics right. You just think about the next day and do the thing that needs to be done. We already know what needs to be done. It's just about doing it. So that's our mantra within our team right now. So that's how we've got into it. Yeah.
So tell me, when it comes to goals, right? I'm sure the time you started hBits, you must have certain milestones to achieve.
Yes.
And now in 2023, I'm sure the goals must have changed.
Yes.
What are your current goals or milestones you want to achieve?
So we definitely have targets, right? So far we have 250 crore under management. We want to take that number to 1,000 crore in about the next 9 odd months. We would like to have properties across the top 6 cities, and that's very possible. We have a very strong team in place, and we want to have in our long-term goal, is to have 10,000 crore in the next 4 years. And I think that's very achievable, because I was just, I was in fact discussing yesterday at a conference only that the overall mutual fund industry is 46 lakh crore. The amount of individual wealth of just individuals combined in the country is approximately 450 lakh crore. Out of that, 80 lakh crore is in residences, in real estate. That's not your primary residence, so as an investment. Yeah. And that's in basically, so far that's only been in residential real estate.
True.
So moving that 80 lakh crore to this is the long-term goal, right? And real estate as an asset class. What does an investor look for, right? An investor looks for 5 things in any product, whether it's an FD, equity, real estate, gold. There are 5 things: safety and capital preservation. They don't want to lose their capital. That's number 1.
True.
Money safe. Number 2 is return maximization. Make as much returns as possible. Number 3 is transparency and good governance. Just being completely transparent, and that gives also a lot of psychological comfort to the investor. Number 4 is hassle-free ownership. That once I put my money in, I've done my due diligence, then I don't want to think. Then I know I've done my research. I can't keep tracking it. I have my job. I made an investment. And number 5 is liquidity. That when I want to exit, I can exit. If not the same day, I know that okay, in 1 month or in 45 days, I'll be able to exit. That comfort that when I need it, I'll be able to get it. Those are the 5 things in any investment. Real estate traditionally has offered number 1 and 2. Right? It's offered good return. It's offered stability because it's a hard asset. And land is kind of limited in cities. 3, 4, 5 is where real estate has traditionally been lacking. It's been an opaque industry, no transparency. You don't know even when you're buying an apartment, you have to like really figure out that in the neighboring building, what is the price, what is the rental. It's very opaque. Hassle-free ownership, you're owning it on your own. It's not easy. Anyone who has a second apartment, managing that, is not easy. And real estate traditionally has not had great liquidity. You have to wait several 6-8 months to exit. So through this platform, we're aiming to give number 3, 4, and 5: transparency, hassle-free ownership, and liquidity. 1 and 2 are already there to the investors. That's kind of the vision. And market is large, right? Like I said, on the investor side, India has 460 lakh crore of individual wealth. 80 lakh crore already in real estate, 46 lakh crore in mutual funds. On the real estate side, just offices, and we look at everything. We look at warehouses, data centers, schools, but just offices, grade A offices, is basically $100 million. So to reach 10,000 crore, which is about $1.5 billion, 2 years in 4 years is what our plan is. And so we are taking a small. Out of that, we want to take the best properties. That's
so tell me, what kind of regulation goes for the fractional ownership? Because there are so many now players getting into this, right? And as an investor, and personally, I would also fear that if someone is managing, and it happens with everyone, whoever even doing mutual, funds, that you are having the right fund manager, a known brand player in that market, because anyone can shut down in the middle of the night and can go with your money, right? So as an investor, I want to understand what kind of regulation goes for fractional ownership.
So I think that's where we are very happy that, and in fact, we've been part of the consultative process with SEBI. So SEBI came out with a consultation paper in the middle of May, and they call it MSM REITs, medium, small, and micro REITs. So they are bringing this fractional ownership industry, which has grown over the last 4 or 5 years, under the ambit of SEBI. I think that's a great thing that's happening. And we've been part of that process, giving our thoughts to SEBI. I think that's great for the industry, great for the investors. There's certain things that SEBI have put in this consultation paper, which will give comfort to that investor, right? They've given disclosure requirements. What all needs to be disclosed to investors. That helps on the transparency front that I was talking about. Right? They've given net worth requirement. They've given background of they've called it investment manager. So background of the investment manager in terms of experience, etc. So that takes care of the hassle-free ownership. And then they're talking about listing it on the exchange. So that takes care of the liquidity part. There are obviously other parts, but overall it's very positive for the industry.
So there have been quite, discussion. Good, you brought the REIT up, because we also have seen in past, wherever we have interviewed people or even written, editorial content, a lot of people have commented, and I want to, I've put that together, and I want to ask you. People have commented asking how different it is from REIT, and why should I invest in fractional rather than why not invest in REIT, where my returns are much quick and I can get bigger. So how do you answer that?
See, that's a great question. REIT and fractional ownership are siblings in a way, right? Underlying asset is the same. Commercial real estate, great tenants, long-term leases, 8 to 9%. So that way, yes, underlying asset is the same. It's the structure that's different. And the way to easily explain it is the way mutual fund is to stocks. REITs is to fractional ownership. Right? Mutual fund, you're giving your money to a mutual fund manager who's allocating it across multiple stocks. In the same way, in a REIT, you're giving it to the REIT manager who's allocating it across multiple properties. Obviously, in India, the 3 or 4 REITs that exist today, the manager itself, it's their own properties are listed. So that is one thing that's slightly different. We are completely impartial in terms of the property. We don't know, it's not our property that we're bringing onto the platform. While all the 4 REITs, it's the same developer who's become the manager. Other is, if you look at historically, REIT has been, because it's, listed on the public stock exchange, it's very correlated with the stock market. Fractional ownership, because you're owning one asset, that asset value doesn't fluctuate. That depends on the actual asset value. So these are a few theoretical reasons. Practically, what it is there are different investor segments for both. Our investor segment, likes to look at the leave and license agreements, like to look at the title report. They like that level of analysis. They like the psychological comfort of saying, okay, in this property, I'm a 1% owner or 2% owner. In REITs, in each REIT, there are 200 odd tenants. No one has the time to study 200 different. So if someone wants to do their own investment, their own research, then they'll go for us. If someone wants just to not think too much, then they'll go for REIT.
So, just would you say someone who is looking for long-term returns should invest in fractional, and someone who is looking for good or quick returns should look into REITs?
I would not say that. I would say they're both great asset classes, and I think long-term returns. I think both. Some of the short-term return mindset, I don't think REIT or fractional ownership is for them. I think both will be long-term returns. I think it's more on just the how close that investor wants to be to that asset, right? And I think a lot of investors want to have that comfort that they've looked at the leave and license agreement. They can see the building, say in this building I'm a 1% owner. So it's very different in that sense.
So currently, what is hBits team size, and where all you guys are present? Also, what are the ongoing projects going on?
Yeah, so in terms of team, we have and that's where we pride ourselves on. We have a very, very solid and strong team. We're about 50 people across Mumbai, Bangalore, and Gurgaon. And to talk about some of the senior leaders in our team, our CFO and co-founder, Sameer, was heading global sales for Nomura. 30 plus years experience, chartered accountant, IIM Ahmedabad grad. So comes with a wealth of experience. Mayank is our CIO. 20 plus years of experience in investing, worked at your best private equity companies like Logos and Indospace, Everstone. He was there for 10 years. You have Mihir, who's our head of investments and partnerships. He has a blended experience in real estate as well as in finance. Worked at companies like Savills, and then worked at companies like HSBC and Citi. We have a director of technology. We have a digital marketing team in house. So very, very strong and solid team. In terms of projects, right now we have one that's going on in Powai. It's Boomerang. That's the project that's ongoing right now, and we should be launching a few more very shortly in the next month or so.
So recently, SEBI approval for hBits to raise funds through Category 2 AIF is quite significant. So how do you envision this, utilizing this regulatory backup to enhance your platform offerings and impact?
Yeah, so we recently got approval for our AIF. AIF is an alternative investment fund. So that structure is a little bit different to the traditional fractional structure that we have. And I'll just explain the difference before talking about what we're going to do with the AIF. So fractional, what happens is we list the property, and then investors can see all the details of the property and then decide whether to invest or not. And they become part owners in that one property. So they'll see that this property is located in Andheri, this is the building, there's the photos, this is the tenant, this is the return. They'll see all that and then they decide whether to invest or not. So that's fractional ownership, property by property. AIF is more like a fund. So what that happens is that we tell investors that this is the kind of investments we're going to make. Minimum you have to make 4 investments in an AIF. That's by regulation. So an investor gives us the money first, and then we invest in property. So that's the structural difference between the two. In our specific AIF, it's a 500 crore AIF, and we are going to invest for us, fractional is already constructed properties, already rented out properties.
Yeah.
For the AIF, we are going to invest in a combination of under construction properties as well as pre-lease properties.
Okay.
So that's another difference between the fractional and the AIF. And as per regulation, our minimum ticket size in the AIF is 1 crore.
1 crore. Yeah.
So given that it's under construction, your return profile is obviously higher. So we're targeting about a 20 odd percent return for the AIF. So at a high level, that's the difference, and that's what AIF gives us. Reason we're doing it is there are obviously good pre-leased opportunities, but there are a lot of investors who come to us and say that we want to invest in under construction as well. We want to get in at an early stage.
Yeah.
They're seeing the growth in the industry, and we're investing in a combination of offices and warehouses in the AIF.
Okay.
So that's where we decided that we'll come up with this AIF to give an avenue for those investors to invest in under construction properties as well.
So when it comes to under construction properties, be offices and warehouses under this AIF, what I'm sure the checklist would be different when it comes to this particular assets. So how do you guys go about it when you're selecting such kind of projects or the properties?
Right. So in fractional, right, the checklist, like I already mentioned, what it is. So in AIF, we have to look at those things as well, but we'll look at a few other things also over and above that, right? So in AIF and under construction, the tenant probably won't be in place already.
Yeah.
So we'll have to look at what is the likelihood of getting a tenant in that location and how quickly. So we will look at, again, what is the vacancy in that micro market? What are the average prices? So then what price will we be able to rent out our property at? What is the square footage of that floor plate? Because it's not just the average price. The 5,000 square feet market is different to the 10,000 square feet market, is different to the 50,000 square feet market.
True.
So we go into that analysis and see for that property that we're looking at, what kind of building can come up and what is the square footage and floor plate. So that kind of analysis we do. There we're also going to be working with probably a developer. So then we do due diligence on the developer. So our focus is only on tier 1 developers, right? Probably your top 20 in the country. But we'll still, just the brand name is not good enough. We'll have to look at in detail. What is the current financial status of the developer? We'll also have to, there's a legal component that comes in as well. So we have to have very strong mechanisms in place where if the developer is, behind on development, focus is not there, has some issues, then we can step in and take over the project. So those controls, etc., from a contractual perspective are very important. And which is why we work with some of the best law firms in the country. For the structure, like I mentioned, we work with Vadia Gandhi. On the real estate side, we work with Shardul Amarchand Mangaldas.
So in terms of AIF for commercial, because I had in past interviewed few AIF companies who are looking to the residential projects, and they are also having certain checklists when it comes to developers doing the thorough research in terms of even why a stalled project is a stalled project or a stressed project is stressed, and they step into micromanaging everything in terms from the contractor or changing the team or
controls on escrow. So
control on the escrow, also changing the kind of materials that are coming in. They might bring a cheaper material but good quality. All of that is considered when they get into the residential front. I want to understand when it comes to commercial, how you said that you do the thorough research. Of course, a branded developers gives that kind of assurance that yes, the project will be completed on certain time. But apart from that, if there's an issue when it comes to it's under construction project, right?
Yes.
There can be issue in terms of the developer not able to achieve certain milestones.
Yes.
How do you step into that particular stage, and how you make sure your stakeholders' investments are intact and protected when you're facing certain challenges, because I'm sure the challenges in under construction projects would be far different from already existing projects, right?
Far different and far more.
Yeah.
Right. That's just the nature of, which is why they're getting higher returns.
Yeah.
So I think the important part to add is, like I mentioned, we have that real estate development expertise. So we know where things can go wrong. So we know contractually what to put in, where things can go wrong and where things you can, that, okay, in contract you don't need to be that strong. Because ultimately it's you're also having a partner as a developer.
Yeah.
And then we'll have, like I said, that the funds. A lot of times developers face issues because of financial closure, because they don't have enough funding.
Yeah.
That in our case is not going to be an issue because we are the ones bringing in the funding.
True.
So we are a platform that's not only bringing in the funding, but also has that development expertise. Most people don't have both those skill sets, right? A developer generally has development expertise, and then he or she raises funding from a bank or from a private equity fund.
Yeah.
Or you have funds, and a lot of these have been global funds so far, or a few now Indian funds, that are people who know how to raise money, they know how to deploy money, they know how to analyze things, but they don't know how to step in and do things themselves. We have that unique advantage because of the background of having both expertise and skill sets.
So how do you make sure the funds, that working capital that you're bringing in that project, how you make sure it's being utilized in the right manner by the developer?
So escrow is very important.
Yeah.
We can have mechanisms where we also sign off on every every check above a certain level, because you're talking about siphoning off of funds, those kind of issues.
Yeah.
Although, I think, and you're coming because you've also spoken to a lot of people in the resi sector. In the commercial, even the profile of developers that we will be dealing with, by just the nature of the business, will just be they're just the top 20 developers. So even though we will have our checks and balances, the reputation of these developers are such as they don't have time to, for them, their brand is so much more important than taking money out of the project in unethical ways. But at the same time, we'll obviously still have the checks in place anyways, and they'll be more than happy to put that in place because they have nothing to hide. So
hBits' role in terms of providing working capital is there, but do you guys also, like how you mentioned, Resi does get involved in the micromanagement?
Yeah.
In every stage of the construction, does hBits will also get involved when it comes to commercial assets?
To a certain level, yes.
So when you say certain level, in what all stages you guys would be present?
No, so across the board, we'll have MISs. So we'll enter post-approval stage. We don't enter pre-approval.
Okay.
So in terms of construction, there'll be milestones that we'll be tracking. That the milestones are met as per the timeline, as we have penalty clauses. So those kind of things will be in place when we do under construction projects. So I'm sure Resi does face this a lot, but when it comes to commercial, what are the exit formalities? Because in AIF, the risk is there, right? Yes, yeah.
There can be any problem in the developer front, or can be a problem in anything. What exit formalities will you guys have in place?
No, so I will say something that's different from Resi and commercial. In Resi, and a lot of these AIFs are doing Resi debt.
Yeah.
We are doing commercial, but we're also doing equity. So that's a slight nuance. In Resi, there's the sales velocity while the asset is under construction.
Yeah.
That the Resi, whichever the AIF is investing, needs to look after and needs to make sure that those are met as well. In commercial, it's very different. Right? In commercial, either you'll have a tenant in place already, then it's already in place, so you're building build to suit, or you're getting a tenant after the construction is done. While for Resi, if you don't meet that sales velocity, then your finances go a little bit haywire. In commercial, you have to underwrite that, if you're doing a speculative project, which is basically a project which is saying that, okay, the tenant will anyways come after construction.
Yeah.
So then you have to just focus on one thing at a time. First, you focus on construction. You don't care about it doesn't affect your sales velocity because funds are provided by us compared to Resi.
True.
And which is why I think the important part was what I'd said at the start of your question, which is where the micro market analysis, that once the building is built, how quickly will a tenant be able to come in at what price? I think that is a much more important question to be asked and question to be answered by us as the investor. And that's where that experience and expertise and knowledge comes in, and the analysis comes in, that, okay, we have that confidence that when the building is built, we will get a tenant.
So that confidence is based on the data analytics or
data analytics, number one. And accordingly, we'll make sure that say, depending on how much you're investing in the project, what the price per square foot is, you'll have a minimum. We'll have to say that the project will have to be rented. If it rents below 100 rupees per square foot, we won't make money. If we rent above, we'll start making money.
True.
So we have to have that confidence that once the project is built, we'll be able to rent it above that rental. So one is through the data analytics.
Yeah.
Number two is that our plan is when we're close to closure of a project, we have relationships with all these potential tenants. So we start having conversations with them. We have a lot of relations with your JLLs, Cushmans of the world. So we start speaking to them. Okay. So both those factors will play into making sure we get a tenant in time.
So give us one example which is currently under AIF, where you have taken upon any project, be commercial or the warehouse.
So AIF, I'll give one example, and the deal is not closed yet. It's under discussion.
Okay.
But it's a asset in Bangalore, and we're negotiating. It's a standalone building. It's a top developer, it's what we noticed that the location is amazing.
Okay.
So, and we look at the rental values of that micro market, and we're confident that I don't want to say too much because I'm negotiating on the pricing with the developer, but ultimately it's a partnership with the developer, so he also has to ensure that we make money. We have to ensure that he makes money.
Of course.
Then only we have a deal. So that's one example. Where the developer is saying even until the tenant is there, they'll keep paying us rentals because they are that confident in that project.
So just for my understanding, if this particular project was quite lucrative because of the location, right? You're able to see the 5 years or 3 years down the line what would be the rental yields, right?
Yes.
So this kind of deep analysis you guys get into.
Correct. And then you can see based on the rental yield, then you rent it out, you earn rent for a little period, and then you sell the asset to a fund that will buy a rented out asset.
Yeah.
Accordingly, you can model out an IRR. That's why I'm saying this 20% IRR. Under construction will be higher, 25%. And we're doing pre-leased as well. So blended, it'll be 20% IRR.
So coming to your IRR, you have projected, as you said, 18 to 20% for investors. Is quite impressive, and it's quite interesting also because that's the claim comes from the hBits, right? So I want to know, can you shed us light on the strategies and factors that contribute to such, strong risk-adjusted returns, and how you make sure, or when you're claiming such,
No, I'll give you some good examples.
So when you're claiming such, of course, high IRR, which is quite interesting and it creates that kind of eyeballs, what are the strategies and how do you claim this?
So I just want to clarify. 18 to 20% is for our AIF. For our fractional, generally 13 to 18%, 15 odd percent. So I'll give you some real examples. And the real examples I'll give more in fractional because those are live assets that we've already acquired. So a couple of examples. One asset we entered, we already sold, we got a 17.5% IRR for our investors. In fractional, where generally you get 13, 15. So 17 was a higher end. We got it. Other is, there's an asset in Akruti Center Point. ICICI Bank is a tenant. We acquired it at 11,661 rupees per square feet. Last year, in that building, there was a transaction at 15,500 rupees per square feet. So we've not sold that asset yet, but mark to market, if you look at current value, investors are already significantly in the money.
True.
In fact, I can confidently say that each and every asset that we have in our portfolio today is significantly in the money. So as of today, all our assets are performing very, very well.
And goes back to the kind of patience you show for those assets. That's why it's a long-term vision. I get it. So your platform is venturing into GIFT City, and now GIFT City is quite in talks because now the recent announcement by the finance minister, and there have been few announcements by SEBI also when it comes to foreign trade. I want to know, when you're venturing into the GIFT City with Global Investor Feeder Trust, how will this initiative cater to foreign investors, and what advantage does it bring to hBits?
So The way it works is there's our AIF.
Yeah.
Our AIF is investing in multiple properties. We have Indian investors coming here, and then you have our gift fund over here.
Yeah.
That will invest in the AIF.
Yeah.
And in the gift fund, you'll have foreign investors coming into the gift fund. So the gift fund is effectively a pass-through. It basically allows foreign investors to invest in our AIF in a tax-efficient way.
Yeah.
So ultimately, investment is the same. It's a structure to enable foreign investors to come into India. And reason we're doing it is quite simple. It's because there's a lot of foreign investor interest in Indian commercial real estate. So I think we are not the only ones.
Yeah.
There are a lot of funds that are setting up in GIFT City. See, earlier it used to be Singapore or Mauritius.
Yeah.
Mauritius, from my understanding, is not as attractive from a taxation perspective anymore.
Yeah.
And Singapore, while attractive from a taxation perspective, is an expensive place to set up a fund. So I think Government of India has done a phenomenal job by creating something like GIFT City. And yeah, we hope to have many investors that come in through that fund, which is why our CFO, Samir, he's based between Singapore and Mumbai and has an amazing global network, is already in talks with a lot of global investors.
So overall, what's your take when it comes to GIFT City? Because GIFT City has been there for long. Now it's getting more proactive when it comes to even residential, buildings coming in. Commercial was there for a long time. So what is your overall take on GIFT City?
I think it's like I said, a phenomenal thing. Obviously, like any new initiative, has teething challenges and learnings.
Yeah.
But what I like to say about that is that, and in fact, we've seen this across the board in various departments of the government, is that they've been very receptive. That anytime there's feedback, they'll incorporate it, and they're working a lot with the industry right now.
Yeah.
I met someone at a conference who was part of the who was kind of a part of the government who took the initiative to introduce us to someone in GIFT, since we wanted to set up over there. So they're being very proactive about these kind of things and listening to feedback and incorporating them and getting those suggestions.
So coming back to AIF, and I'm quite curious to know, see, we started, you mentioned, and it is clearly stated in SEBI that the minimized entry is 1 crore, right? So already we are seeing influx of AIF companies coming in, not just on Resi front, but also in the commercial front, especially when it comes to GIFT City. They all are looking into it because of the tax, being free or evasion, tax can be evaded for foreign investors. I want to understand how or what USP would you form to stand apart or stand against or stand differently from the existing AIF companies?
So in terms of Resi versus us, completely different products.
Of course, yeah.
So, in terms of commercial, as per my knowledge, there are 2 or 3 other funds who are, there's one other fund that's doing only warehousing. There are 2 other funds that are doing commercial but only pre-leased assets.
Yeah.
So we are in that space, and we've done our research. We're the only fund that is doing commercial under construction with a blend of under construction and pre-lease. So that's our niche.
So you're saying you don't have competitors in that?
Our competition, obviously, our competitors. Our competitors are all the other investment options.
True.
But in this space, we are the only player as of today. And
that will give you a good upper hand, I think.
Correct.
With the new of players coming in.
Yes, and that's why I like to say that the reason we're able to do that, and we have the confidence to do that, is because we have that blended experience in real estate development, as well as in investing. True. That gives us that edge.
So talking about AIF, in Resi, we have seen they also require, SEBI registered trustee and everything. When it comes to commercial space like this, do you guys also have to have a SEBI registered trustee who make sure that, everything is in place and go through the certain...
Absolutely. No, absolutely, we require a trustee. So, in fact, all AIFs do. So we have Catalyst, who we've appointed as our trustee. So kind of they are in charge of the trust, and that's why all the checks and balances are in place for all the investments that are made through the AIF.
So let's talk about proptech landscape, right? In India, we have seen proptech from way back also, where 2016, 15, there were few companies like housing was there, then later Makan and Magic Bricks and everything was there. How would you see, from that time till now, how do you see the proptech landscape has evolved? And are we there in terms of when it comes to mature tech, in terms of the companies that are coming in and trying to cater to the need gap that is there in the real estate front?
I'd say that there are obviously multiple different subsections of proptech.
Yeah.
There's to start off, there's construction tech, which from what I hear, I'm not too closely involved, but there's a lot of action happening over there in terms of, enhancing kind of how the speed of construction and the quality of construction using technology. There are the housing and makans of the world that you mentioned that are basically aggregator platforms where people can see the properties and buy properties.
Yeah.
There are no brokers and square yards of the world that are doing very, very well. And, these platforms have tremendous user engagement if someone wants to buy an apartment. And then there are players like us, where the whole streamlining of investment into real estate. And sorry, the other segment that I missed out, which is, I think, one of my favorite segments after obviously I have my own segment, is the IoT segment, which is a little bit more hardware. And, I was amazed the other day, it's impacting my daily life as well in a very, very positive way. I mean, for instance, went to the mall the other day to Phoenix Mills, and there's no ticketing anymore. It just takes a photo of your card when you're exiting. Depending on how long you stayed, they charge. And I think that's these kind of innovations in IoT are significantly enhancing the building experience, right? I mean, any office building you go to, I'm sure you experience, even at the check-in.
Yeah, there's a complete touchless.
Complete touchless. They take a photo, OTP sent to your phone. So that's enhancing security measures. I know that there's technology happening that depending on, and I think certain buildings are implementing it, that depending on where you are, the cameras measure the density, as well as thermometers mention the density and accordingly modulate the temperature. And HVAC consumption, twofold, right? One, it's a big electricity consumption. So that's reduced. So it's increasing the bottom line for the developer or the society. And also, I mean, overall helping global warming, because so lots happening on that front. To talk about, in our space, what we do, one is investments are completely streamlined. We have investors that come from 30% of our investors are NRIs. They are investing from sitting there, right? And the way they're investing, it's completely streamlined. So you see your photos, your video walkthrough. We're working on, virtual reality tours of these properties. All details available. Click of a button. We have rental calculators to show how much you'll make. Any decision that historically was, any information that historically, say, a Blackstone would use to decide to invest, is now just easily available to any investor. So that's there. Then once someone decides to invest, completely seamless, right? Your digital signatures, your payments, documents can be signed completely online. Then you can track your real estate portfolio on the dashboard the way you track your stock portfolio on a Zerodha. And we have constant updates, valuation reports. And then you can exit your share. So there's a secondary platform where you can exit your share on the platform at any point in time that you want. So that's kind of even as of today, that's what we're doing. And we have a lot more planned. So for instance, we're working on creating a map of each and every transaction that's happened, and just showing that to people on our dashboard, because information is key. More information you have, more confidence you have. And the more trust you build in investing. So having a map, each and every transaction in a very user-friendly way. So that's in the works. Other is on the acquisition side. Each and every acquisition, there's so much data that we go through.
Yeah.
So we're trying to add algorithms to the place to predict in which way prices are going to move. And we have all the data we need, right? We work with our data partner, CRE Matrix. So in that building, in other units, the neighboring buildings, what is the per square feet rate of every transaction, when it happened. If it's a rental, the per square feet rental. If it's a sale, the per square feet sale. When it happened, you have access to all the agreements. So then what is the right price to pay? Also through government websites, and I think it's credit to the government for that. They've been very transparent.
Yeah.
Through government website, you can track for any construction, you can track where the file is on the approval stage. Is CC received? Is IOD received? Is OC received?
Yeah.
What is planned? So you know what new supply is also going to come up.
True.
So you know supply, you know demand, you can predict the price. That's what we're working on the back end. And this is the third thing, which is we can't do it on our own. Requires a lot of government support. And I know Telangana government, I was reading last month or 2-3 weeks ago, they have a framework for blockchain.
Yeah.
And if land records are put on the blockchain, that will greatly ease transactions happening, give a lot of comfort, trust, because then there's a single source of truth.
Yeah.
And I think that's still a couple of years away. And that requires a lot of stakeholders to come together, industry participants, the government. And I think this is also a state by state subject.
Yeah.
But I'm sure as soon as one state implements it, then it's all the governments will start implementing it. So I think lots happening in proptech right now.
So you would say that overall the proptech landscape in India is going in the right direction. It's maturing in a good manner when it comes to tech integration, when it comes to providing good solutions.
Yes, absolutely. And I think that the beauty of proptech compared to other techs, right, is there's still a hard real component to it.
Yeah.
And so compared to a few other techs where the industry has gone like this and then like this, I don't see that happening in our industry because sure, proptech has always kind of lagged behind just because there's a hard asset, there's something hard involved, there's a lot of regulatory oversight involved. I think that's a good thing because then whatever tech comes, it comes for the better and not just for the hype.
True.
So I think it's slow and steady, and we're kind of at that inflection point where lots has happened in the last few years. So you're going to see a lot of changes in the industry.
So in comparison to edtech or fintech and their e-commerce and everything,
right?
There are a lot of unicorns there, right? So would you say having less, because we have like hardly few unicorns when it comes to proptech? So you would say still a good picture because it doesn't matter if there are not a lot of unicorns in the proptech because as you
sustainable
said,
unicorns.
Yeah. So as you would say that their services or their products are for the long term, and of course it's there for people to feel and everything. Right. So would you say having less unicorn in proptech is also a good way to look at it?
Everyone wants more unicorns, but you want unicorns who stay unicorns.
True.
And maybe we should start measuring instead of valuation by profit.
That's good. Yeah. So I want to understand now about proptech in terms of investment, right? So when you started your journey, I'm sure you were bootstrapped, and last year you raised fund. What would you say? How is the investor sentiment when it comes to investing in proptech? Because we have seen unfortunate scene where there have been a write-off recently, right? So do you feel such incidents also, make the investor feel shy because they already are not aware or they don't understand the real estate when it comes to technology, right? Because when it's real estate, a lot of people have skepticism about the product or about the whole market itself.
Right.
So what would you say? How is the investor sentiment as you have recently raised funds?
Yeah. So I will say that when a write-off happens, investors do get they take that step back, they do get wary.
Yeah.
And so it's definitely up to the stakeholders in the industry to make sure that doesn't happen, right? It's up to the good actors to make sure that doesn't happen and do things in an ethical, right way, in a sustainable way. having said that, investor sentiment is very, very positive. We raised our round from a bunch of angel investors who are, industry stalwarts in their own field.
Yeah.
So all of them are very, very bullish on proptech. And I think what's happened is, as I think post-COVID, prop in itself as an industry has gone up. Resi has done very well.
Yeah.
Commercial has been through the worst of times it can ever be through, right? And yet it is where it's at today, because in India you can't work from home. So the prop in itself is so positive that tech just becomes an enabler.
True.
Yeah.
So let's make our viewers also aware, because last year you raised fund. How the conversation actually go when it comes to investors? Do you need to make them understand, like you are in the fractional fund and then you later announced AIF? I'm sure you must be sharing these, of course, these milestones with them also. Are they able to understand this whole dynamic of real estate, or do you have to make them understand why it is going to be having good returns? And first of all, where do you see this in down the line, be 5 years or 6 years?
Yeah, so see, we've raised from a bunch of angel investors. Yeah. So some of them, right, and we made it in we thought through the kind of investors we wanted. So one, we have to get good distribution. So we got Nirmal Jain, who's the founder of IFL, Ambit Family Office, Incred. Yeah. They obviously understand. We got a lot of the real estate people to invest. So heads of few of the IPCs, they've invested, few developers invested. Then we have some tech founders. So Akrit, who's the founder of Haptic, he's invested. So we try to get people from across the board in the ecosystem. In terms of real estate, obviously, finance people, real estate people know the numbers very well. Not like the others don't know the numbers, they're just not exposed to the industry as much. Yeah. Once you have a conversation, show them the market size, show them how that works, they're pretty convinced. Then the question becomes, can you execute on it? And that's where the management team, etc., comes into place. And
why did you feel as hBits that you guys had to raise funds? Was there any kind of strategy or a kind of milestone that you felt that you want to achieve, and it can help only during this funds?
Well, that's a great question. So, and we'll be entering the market to raise our next round shortly. But we hope that the next round, and not hope, I think that's our plan, that the next round will be our last round. And after that, we'll be profitable. We want to be profitable by March 24. That's our goal. I think the reason to raise was obviously to just build the team. But once we reach a certain AUM number, we'll be profitable, and then we won't need to raise again. So that's kind of our plan on the fundraising side. But we built in a very systematic, profitable way. At a unit economic level, we're already profitable. So now we just need to reach a certain scale to cover our fixed costs.
Okay. So let's talk about tech. hBits, I want to understand, we have spoken about data. In what other manner you are integrating tech when it comes to having seamless operation, or when it comes to having the data security of your investors? So what all tech is into hBits?
Yeah, so I'll give a few examples, right? One is, for instance, now you have, and this is not a buzzword, I know it is a buzzword, but I don't mean it in a buzzword, you have ChatGPT, right? So now we are training a bot to be able to answer all our majority of our customer queries on the platform itself. It's still in the works, but we're going to implement that. So what that does is that it answers a lot of customer queries immediately without having to talk to a relationship manager. That's one example. Other example is, obviously we have to take the KYC of the customers because they're investing. We're implementing a system where you can just enter your PAN number and then we'll pull and verify the KYC given the government repositories. So that's another one. Other thing we're doing is more on the back end, which the customer doesn't see. But based on how the customer interacts with the website, we're able to get a profile of the customer and then appropriately, educate the customer or give him the correct information. So those are a few of the things that technology is helping us with.
So when it comes to data, there have been a lot of companies where data leakages are happening, right? So it's become a huge concern, not just for the customers, but even for the companies. Absolutely. So how do you make sure the data of your customers are intact?
I think that's just by good practices and having the right people on board and following the right protocols. So, I mean, getting a little technical, but really getting to the minute, we make sure that all our APIs are protected.
Yeah.
We work with external agencies to do VAPT testing, make sure the securities are there, all the firewalls are in place.
Yeah.
And having the right people to implement these systems and prioritizing and focusing on that. Again, and it comes down to the same philosophy, right? We prioritize these things over just growing and building new features.
True.
See, security is something that customers don't see until it goes wrong.
Yeah.
So a lot of companies choose that we'll keep building new features. This, theek hai. But we don't want to do that. We don't want that situation ever to even arise. We're GDPR compliant.
Yeah.
So all these things are in place.
So as you mentioned, ChatGPT, now everyone is integrating that in some way or the other when it comes to real estate market also. There'll be more tools coming in when we are talking about machine learning, AI. So when it comes to hBits, such new technology, how you make sure that you are first of all evolving with the technology and your strategies or your technologies is in par with whatever tools are coming in the market.
So I'll give one answer and I'll give the cheeky answer. One answer, obviously, we have an amazing team in place. We have a great tech vendor and tech team in place, and they're always abreast of information. And I have my brother who's working at BCG Gamma in the data science arm in New York. So me and him are always sharing notes. He's always sharing ideas. Also in touch with a lot of my Stanford professors. So, and friends over there who are in computer science, who work at Facebook, who work at Apple. So we also share a lot of information. And then that's where a lot of knowledge of what's happening, and then we have to implement it over here. Once we get that information, the tech team is so capable that they just implement it. It's more about the ideas, and ideas come from everywhere. It's being involved in the market. Implementation obviously is done by our team.
So Shiv will do our last round. That's rapid fire, quite popular in Let's Talk Business series. So here I'll ask you a few questions where you don't have to think too much, and whatever first thought comes, we would love to know more bit about you. And I'm sure our viewers would also love to know a bit about what ticks Shiv.
Sure.
So first I want to know, what's your go-to comfort food?
Go-to comfort food, this is my favorite, Swati snacks, panki, the panki at Swati.
Nice. Yeah. So if you could have any superpower, what would it be?
To fly.
Okay. Yeah. Favorite travel destination that inspires you?
So this is, I mean, I've been to a lot of places, but I love Goa. I just love Goa because one, it's so close to home.
Yeah.
And, there are a lot of beach towns in the world that I've been to, Thailand, etc., to Brazil, but Goa has this way of not losing its nature charm.
What's the last book you read, and did it leave an impact on you?
Yeah, so last book I read was, I forget the name, but anyone can look it up. It's the Netflix book.
Yeah.
No Rules, that's the name. And the way they've designed their organization culture, the kind of transparency they have, I recommend any startup founder, and to be frank, anyone to read it. It's very unique and just impacted a lot about it, and thinking about how to implement that in our organization as well.
Interesting. So how do you handle stress or tough days?
So I think after a tough day, I really try and meditate. Because what happens is that your mind just starts racing and a lot of thoughts happen. So I think meditation is a practice, and I use this app called Waking Up. So it's a guided meditation. You can choose either 10 or 20 minutes. And depending on how much time you have, I try and do that.
Nice. And any quirky habits or routines you follow?
I've picked up this new sport called paddle. So that's really picking up. Not quirky, but it's a fun new activity I've picked up.
One hobby you secretly enjoy outside of work?
I enjoy playing golf.
Nice. How would you convince someone who is skeptical about fractional ownership to give it a try?
I'll just educate them. You have to just keep reading and understanding. And once you do that, you'll just see why it's a very solid and safe investment. So
create awareness.
Yes.
One real estate trend you like to see more of in the future?
So not relating it to my business, because that obviously is there, but I think the smart buildings, which I was talking about, I'm very fascinated by all the various things that are possible. Smart buildings, smart apartments, smart houses.
Yeah.
Basically, the IoT part of real estate.
The most unusual thing someone has ever wanted to own a fraction of.
I wouldn't say unusual, but I think there are a lot of people, a lot of companies that are, you can own fraction of art.
Yeah.
You can own fraction in, when the whole NFT craze happened. You can own a fraction, or you can tokenize and own a fraction of a video clip. So those are always unique and fun things to see that, okay, is there art obviously has an intrinsic value. Yeah. But in these, that bubble that happened, was there actually an intrinsic value in owning a fraction or a token of the NFT of that video clip, for instance?
So I want to know best advice that you have ever received and the worst advice.
Yeah, so my father used to say this to me when I was much younger. Every time before going to exams, and to be honest, I did pretty well in school. So I think that advice helped me. So he always says, just be cool, calm, and collected.
That's a good advice. Yeah. And the worst advice?
Worst advice, I don't know. It's
not necessary you must have taken it, but when you look back at it, you might chuckle. That's kind of advice also you received.
So not the worst advice, but I see a lot of people just say that, oh, go with your heart, etc. But sometimes you have to use your head and be sensible also.
True. A motto or philosophy you live by.
So this is, so in fact, I'll give you the story behind this. So at hBS, I graduated from hBS. So on your last day of class, they ask you to write a letter to yourself that you'll open in your 5-year reunion. So I just had my 5-year reunion in May. And most people had written long letters. Oh, I hope that you reach this stage, etc. Yeah. I just had 7 words or 8 words written. And it was like, no regrets, don't overthink it, it's just life.
Nice.
Yeah.
So any particular entrepreneur you admire and why?
I admire a lot of entrepreneurs.
If you had to name one.
But I think I admire Elon Musk a lot. He's very smart and just great work ethic.
Okay. And one misconception about fractional ownership you like to debunk?
One misconception is, in a way, people think it's a new age concept. But people have jointly been owning property for the longest time. It's just technology that's enabling it in a more easier way.
Luxury penthouse in a bustling city or a cozy cabin in the woods?
No, I love cities. So luxury penthouse, I like the action. Yeah.
The ultimate dream, fractional ownership of an iconic landmark or an off-the-grid sanctuary?
I think sanctuary.
Yeah?
Yeah, where people can, say that they're co-owners, go there, be with nature.
True.
As long as it's protected.
Of course,
yeah.
If you could time travel, where and when would you go?
So I can go future or back?
Yeah.
I'd go 20 years into the future and just see what the world has become.
Nice. And one word to describe your leadership style?
Always curious.
And advice you would love to give or would like to give to the aspiring entrepreneurs who are planning to get into real estate market, what it would be?
So advice to give entrepreneurs in general is that there are highs and lows, but you just have to keep moving forward, just one step ahead of the next. So
thank you so much, Shiv, for joining us today on Let's Talk Business.
It was great being here.
Yeah, it was lovely to know about hBits and more to learn about what you are into and what are your plans for the future. And I wish you all the best.
Thank you. Thanks a lot. Great being here. Thanks.